we'll have two presenters today. We ask that you all hold off all of your questions until the Q&A session. As a matter of fact, please send your questions to me in a private chat, and I'll present them in the Q&A session as the order that they come in. If we don't get to answer your questions today, you can send them to us at info@globallaw.tv. And so I'll go ahead and let Jeremy get this thing, Attorney Jeremy Johnson, get this thing started.
Thank you, everyone. It's going to be a great meeting today. One thing that I pride myself on is making sure we teach the real steps. Oftentimes you go to presentations and they'll just be talking around the issue and claiming they have a certain level of expertise and insight. But we're going to teach you the real steps to invest into Africa. Africa, as you know, I mean, there's so much opportunity. I often align Africa with the opportunity of a lifetime. I mean, because whatever your expertise is, whatever your skill set is, these things can be done in Africa. And Africa is looking for investment. If you know the numbers say Africa has many of the fastest growing economies in the world. So this is an enormous opportunity for you. And we're looking forward to bringing you significant value. And I believe it'll be very informative. As I mentioned, my name is Jeremy Johnson. I'm a U.S. attorney, practicing lawyer in the U.S., focusing primarily in Philadelphia and New York. My practice primarily involves U.S. trade law and emerging markets in sub-Saharan Africa. I have provided legal advice to many lawyers and law firms in Africa. And I began my career as an assistant district attorney in the city of Philadelphia, district attorney's office. Tayo, he's a global development consultant with over 3 decades of experience spread across 30 countries, with over 12 years in Central Asian countries. His specialization is developing projects from concept to implementation and working with resource development agencies to provide funding for projects. So these are the speakers that's going to be talking. So we're focusing on the real steps to invest into Africa. And we're going to focus primarily on topics. We'll be talking about industries of passive investment. Africa has many industries. I mean, there's many segments in many areas, but when it comes to passive investment, there are certain industries that I recommend individuals begin to consider to looking towards passively investing. So we'll talk about that. We're also going to talk about how to value a business. It's important before you put any money into it. You need to know how much the business is worth, as well as how much you should value the amount of money you're going to put into it in exchange for the percentage of the company. So we'll talk about that. We're also going to talk about the contractual and legal implications. When you're dealing with investments, I mean, it has many legal implications. There are contracts involved, there's laws involved, and we're going to break down many of those things to make certain that you are minimizing your risk. That's one of the common things you'll hear throughout this presentation. How do I minimize my risk? Because this is investment. This isn't charity. This is investment. Africa they need aid, but they also need investments. They've been getting aid for decades. Now it's time for investments, and they're doing that, and we can be a part of that as well. And we're also going to teach you how to protect your investment. Once you have given the money, how do you protect it? How do you adequately ensure that, okay, before I invest, what can I do to increase the chances that I'll get not only my money back, but also return on my investment? So we'll talk about that. And then again, we'll talk about minimizing risk, because that's very important. When you're dealing with any investment, there's risk involved. Any venture in the U.S., anywhere, there's risk involved. And when you combine that with dealing with developing nations, emerging markets, emerging economies, the risk can be heightened to a degree. So we're going to teach you how to minimize your risk. And so you can have a holistic view, so you can go in, prepare, and have fully aware of what you're doing. Before we begin, let's talk about some of the strategy that you have, because it's important to have strategy. And this is a form we have. We're going to send this form to you. So don't worry about necessarily copying it down. But before you invest into the country, first, I always recommend, one, go to Africa. I'll be going to Africa this time next month. I'll be in Ghana, working on behalf of some clients, as well as continue to network and continue to build relationships. But it's important to know, I would recommend at least 3 countries that you are thinking about investing into Africa. Africa is over 50 countries. So, and it's also important to know the country you're going to, they speak different languages. For example, look at this map. The red is English-speaking countries. The blue is French-speaking countries. These are what they call the business languages in these countries. And this is they're based on the colonial heritage. If you know about the history of Africa, it was colonized by the Europeans. And one of the things they put in place was a certain language. And so, for example, if you are this is Ghana right here, there's an English-speaking country. Right next to it Cote d'Ivoire is a French-speaking country. And so this is important. So if you are a person who's looking to invest into an African country, African nation, it's very important that if you are an English-speaking person, I would recommend at least starting out with the English-speaking countries. They're all here. There's Kenya, Uganda, Tanzania. There's many countries that speak English. So I recommend you go to that. Now, if there's an opportunity, an enormous opportunity, maybe an opportunity of a lifetime, then I would recommend you could go where the opportunity is at. But there's opportunity all over Africa. I mean, it's one of the largest continents outside of Asia, I believe. And so there's plenty of opportunity to do that, because you don't want to go to a French-speaking country and you don't speak French, and they present you a French contract. That's an entirely different issue right there. You don't want to sign a contract that you can't even read. How can you speak to an investor? How can you get quarterly updates or annually updates? And it's difficult that you all don't understand the language. Now you can get interpreters, and that can help minimize that. But since there are emerging markets all over throughout the continent, it's important that I recommend at least be mindful of the language barriers. But if you're a person that can speak English and French, then that works well. Or you look at North Africa, they speak more Arabic. So if you're a person that can speak Arabic and speak multiple languages, then you can do a significant amount of business there. Also, I recommend choosing 3 industries to invest into. That's equally important. There are a lot of different industries to invest into. We're gonna talk about that. I mean, agriculture. There's manufacturing, entertainment. There's many industries that we're gonna talk about very shortly. Pick potential 3 industries to invest into. So that way you start learning about these different industries. So you can be a savvy investor, because it's important that you can't just throw your money at things. You have some knowledge about some of the things you're gonna invest into. And then once you have your countries and the industries you want to invest into, and you start looking into these countries, one of the legal metrics I want you to really be able to answer is, was there a peaceful transition of presidential power for the last 2 elections? That's very important. As you saw in the U.S., we just had our recent election, and many nations had elections as well. But in the U.S., there was a peaceful transition of power from President Donald Trump to President Joe Biden. And that's good for business confidence, because the day Joe Biden was sworn in, the stock market went up. So it gives you a lot of confidence in business, because if they're not a peaceful transition of power, that's not the environment you want to be investing into. This is all about the real steps to invest in Africa. And one of the real steps to invest in Africa is minimize your risk. That's very important. So if you invest into an environment where there's an authoritarian government, or there's not a peaceful transition of power, there was so much violence in the last president's election, they may not be the place you want to begin to invest into. Now, there's an enormous opportunity, like a once in a lifetime opportunity, then you may want to consider that, but I recommend that you do not. Next thing you want to do is, can a foreign business own a local business? That's very important, because from the US side, to minimize your risk, you don't want to put your own money into this. You want to create your company and have that company invest into local businesses in Africa. We're going to talk about that as well. So before you even do that, you want to ensure that, can a foreign business invest into a local business? That's critical. And also, as I mentioned earlier, is the official language of the country English, because that's critical. That's critical to understand. Because we mentioned there are different languages spoken all throughout Africa, and if you don't necessarily speak French or speak Arabic, when you're beginning to invest and you're beginning to visit a country, lean towards the English, the Anglophone countries versus the French or the Francophone countries. Now you can learn these languages, and also you have to understand that while the business languages may be in these different European languages, there are many languages spoken in Africa. There's hundreds of languages spoken in Africa. They may call them indigenous languages. And for example, in Kenya, they speak English, official language is English, but everyone may not speak English every day. People may be speaking Kikuyu, or in Ghana, they may be speaking Akan, or they may be speaking the Zulu. They may be speaking many types of different languages. And it's important to know, is the investor that I'm going to invest into, because we have some African entrepreneurs on here, and in Time Presents, we'll allow them to potentially, maybe 90 seconds, just briefly describe their business and how you can contact them with more information. But if there's a potential, like a commercial farmer, that commercial farmer may not speak English every day. He may be speaking in the local language. And then the laws in Africa have become very, very strict on how valid a contract can be. For example, you sign a contract with a potential investor, and the investor does not speak. You sign a potential contract with a company, and the entrepreneur does not speak English or doesn't even understand English. That contract can be voided, because they want to make certain that this person, this entrepreneur, knows exactly what he's getting himself into. So you can get interpreters and minimize things such as that. But it's mindful to be aware of The languages. That's why I say choose three countries to invest in, because there's so many languages to invest into. And if you just follow this, if you follow this form in and of itself, you're already minimizing your risk of losing your money. You're already minimizing the risk when it comes to investing into Africa, because you understand just the language concept, with a peaceful transition of power from the other elections. And so once you have your countries in place, let's talk about some of the top industries in Africa for passive investment. My first webinar was more about active investment, more foreign direct investments, how you are taking a controlling interest in a company, and how then you can maneuver within that. This is more passive investment. This is going to be, you will be ideally, you'll be in America with your current job, and you just be investing in companies in Africa. So we're going to talk about that. The first one is agriculture. The numbers are enormous when it comes to Africa, as far as the potential on agriculture. You think about rice, cocoa, cassava, all these different things, even non-fruits and vegetables like fish and chicken. When you think about Africa from an economic standpoint, the supply and demand aspect, Africa suffers from a supply side constraints. That's important to understand. The demand for these goods are consistent. There's a demand for it, but there's not enough being produced. For example, with rice is a staple crop with many African nations. It's very common to have rice every single day. That's not uncommon, or to eat it quite a few times a week. But many African nations import rice. They import rice. So that's an opportunity. That's an opportunity. The numbers say there's so much fertile land in Africa, it has the potential to be the breadbasket of the world in the future. So that's potential. There are a lot of qualified farmers who've been farming all their life. They come from a generation of farmers. And we're going to teach you how to evaluate them and how to make certain that, okay, this is a safe bet. We're going to teach you all of that stuff. But I'm just showing you the opportunity right now. Rice, I mean, these are opportunities. Poultry, fish. Fish is a big part of the African diet. So these things are there. So that's an opportunity for passive investment. Manufacturing, following up on the agriculture standpoint, agriculture equipment, how you can mechanize the process of processing raw material into something that's a finished product. Because it's not uncommon to see one of these items in the first line be exported and then re-imported back into Africa in a juice form. Like, for example, pineapple, they may export the pineapple to another country who will process it and send back pineapple juice. That's not uncommon. That's not uncommon in many African nations. So you, as an investor, you can say, okay, let me purchase some of this farming equipment. And the benefit of being in America, America is known for its quality when it comes to farming equipment, agricultural products, fertilizer, seeds, and these are the things you can help the investor invest into so they can be more productive. You can buy a commercial juicer, these farm equipment for a couple $1,000s. You by yourself, or you can get together with a couple of your peers and you can buy some of these things. Ethanol is also a good product. For example, cassava. You can buy a machine, maybe a smaller factory, help them make a smaller factory and convert cassava into ethanol, corn into ethanol. These are some of the things you can do that I feel like Africa in many ways will be the next manufacturing hub of the world, because there's affordable land, affordable labor, and it just the supply side constraints on it. There's just a demand that's not being met. So these are many things you can do in Africa, and you can help the individuals who are doing these things do this as well. Tourism. I mean, the numbers say Africa has over 18,000 miles of coastline. When you look at the African continent, and you have a entire coastline. These are beaches right here. These are legitimate beaches, and some of the best beaches in the world are in Africa, like blue ocean water. So from an investment standpoint, you can invest in some of this stuff. You can, for example, you can buy investment property for yourself, as well as you can buy investment property to rent out. There are property management companies in Africa who will do it all. They will manage the property. They'll find you a tenant. They will also collect the rents and also fix the damages. You can find that in any country, and you can also find it in Africa as well. And the cost of the land may not be as expensive as it is in many other places. So that's one way. Another way is hotel. You and a couple of your friends, your investors, can get together and you can build a hotel or buy a hotel and renovate it. And the thing is, once you do that, you'll reach out to one of these big hotel operating companies like a Marriott or the big national brands. Oftentimes what you will see is they are not the ones that are building the hotels. Big entrepreneurs are building the hotels. Developers are building these hotels, and they reach out to a Marriott, like a Courtyard Marriott or whatever, or whoever it is, and say, I need you to run it, because they know how to run hotels. And then that, you can tap into their international brand, as well as they know how to make things run efficiently. So that you see that all the time with hotels. Many of the hotels, maybe even most of the hotels you see, there are developers and operators who are passively investing. They built it, they developed it, and now they're splitting profits either 60-40, where the entrepreneur gets 60% of the profits, and the Marriott or wherever the big brand company is who's running it and operating it, they'll get like 40% of the profits. They'll split it that way. So that these are opportunities that you can do from a passive standpoint, and you can minimize the risk. If you are going into business with a big brand hotel, you're minimizing your risk because they know what they're doing, and they also have hotels throughout Africa as well. It's not uncommon to find this. I was in Sierra Leone. I recently did a video in Sierra Leone. Last one in Sierra Leone, the Hilton Hotel they're building a hotel. They're building a nice fancy hotel. It's going to be on beachfront property. They're building that. It may be finished now, but they were definitely building that in Sierra Leone, Freetown. Also Airbnbs. We know the idea of Airbnbs. When you go to different places, Airbnb, no matter what country you go to, that's a thriving business. Also flipping leasehold land. This is something that's not really talked much about, because Africa in many ways is a leasehold. Idea is that if you're a foreigner, you can't own land outright. They'll only give you a long-term leasehold. That's in many, if not most, of the African nations. The vast majority of them, maybe, that you can't own land outright. You can only have long-term leases. For example, a 50-year lease. You have that in Ghana, or maybe a 99-year lease in another country. So what you can do is, I have a whole entire article about minimizing your risk when you come to leasehold land. But this is a tremendous opportunity. One thing you can do to protect your investment is that you can, in the contract you sign when you're buying this land, you want to get a right to automatically renew your lease. So say, for example, you're in Ghana or another country that has a 50-year lease. In the contract you will have the right, the entrepreneur, the investor, to automatically renew that lease. So now you have it for 100 years. Now you may say that may not be enough. 100 years, I want to pass this down to my heirs. But there's other things you can do to minimize the risk. These are legal structure and how you can structure your contracts. One is that you can multiple periods of 50 years. So for example, instead of saying Jeremy Johnson has a right to renew at the end of his lease, you say Jeremy Johnson has a right to renew this leasehold land for up to 3 consecutive periods of 50 years. So that gives you a total of 200 years. The original 50 years and then 3 50-year periods. That's 150 plus the 50. They give you 200 years. And the reason you do that is because instead of just saying 200 years, you'll be violating the law because you're only going to do it for 50 years. But if you're doing it for consecutive periods, now you have up to 200 years, and you can make certain that you feel comfortable and that you are minimizing your risk and you have this property for a long time. Another thing you can do when you're dealing with leasehold land to minimize your risk is that you can get insurance. There's insurance out there where you can get on the land that if it's time to renew your lease and they don't allow you to renew after those 50 years, after 100 years, the insurance will pay you back for everything you have invested into. So these are things you can minimize your risk when it comes to leasehold land. I hope that makes sense. I hope I'm explaining that well enough. But when it comes to flipping leasehold land, is that you can buy a lot of this beachfront property. One thing Akon said Akon's from Africa, so he's very aware of these opportunities. When he first got his big money rapping, he bought thousands of acres of land, beachfront property in Senegal. And he's just holding it, knowing he knows what the international world values. We value beachfront property. And so he's gonna be able to flip that when the prices rise to make money. And these are some of the passive things you can do. So there's tremendous opportunity. Also music and entertainment. The music industry in Africa is enormous. I mean, Nollywood, these are billion-dollar industries. Some of the biggest artists, Wizkid, Burna Boy, these are some of the biggest artists in the world. And there's many that will be rapidly growing, and you can invest into that. There's entrepreneurs that are looking for investment to start a studio, to modernize a studio. You can invest into that. And if they're already profitable as a studio, you can invest into that and then be able to get a higher return on your investment. You can start to help invest into a record company out there. Maybe have a nightclub, a lounge. Many places in Africa, particularly in the main cities, in the major cities, they have nightclubs just as nice as anything you'll find in New York City. That's why it's important for you to go to Africa. Go to Africa and see for yourself. I challenge you to just see for yourself and say, okay, this is what I'm dealing with. You'll start seeing the opportunity. Okay, this is the industry I want to pursue. You start speaking to people in this country. What are the industries that are best for investment, where the need is the highest? And people will tell you. They'll tell you. Technology. We all know technology. Africa, in many ways, they grab a hold of technology the quickest. For example, Africa, they have mobile money. A lot of countries in Africa have mobile money. A lot of Africans are unbanked. So one of the things they took hold to was on their cell phone. They have mobile money on their cell phone, M-Pesa, the MTN if you're in Ghana, but the money is on their cell phone, through their cell phone connector. That hasn't come to America yet. Also, Africa went from no phones to cell phones. They skipped the whole process of landlines. So Africa holds quickly to technology, and their technology scenes all throughout Africa. I mean, in particular, South Africa, Nigeria, Kenya, and even Ghana. These are big technology hubs who are entrepreneurs are investing into products that's for Africans. That's what I understand. It's important to know that Africa has over 1 billion people. So you may not be aware of it in America, but there's 1 billion people in a market that you can invest into and change and be able to bring value to. But the key issue is trust. If you don't trust the entrepreneur, or you can't find trust in this, then it's not even worth your time investing. It's not worth your time. You often hear about the shady individuals that you'll come across, maybe, but there's shady individuals everywhere. In Africa, you go to Africa, you see there's tons of good people. There are a lot of good people. But the key is you got to find individuals you can trust in, find companies that you can trust into. And we're going to talk about those things. How can you increase your confidence level before you give $1? How can you increase your confidence level? We're going to talk about that. So you have your industries. You know what countries you want to invest into. How do you find the companies to invest into? That's critical. I mean, you have all this information. How do I go about finding companies to invest into? One thing, the U.S. government. Go to the U.S. government. In particular, there are many options. There are many opportunities. The United States, they do trade missions. American government sponsors trade missions. They'll go to different countries. Entrepreneurs, they'll say, come with us. We'll go to this country, maybe Nigeria, maybe South Africa, maybe whatever. And then they'll help facilitate investment between different entrepreneurs. This is what the American government does. Also, ITA, they have commercial services. These are things, I'll send these slides out to you as well, but they are commercial services. They will introduce you to potential partners, potential buyers that you can do business with. These opportunities the American government understands. Now, ITA focuses primarily on export, but as I mentioned earlier, America does fertilizer, seeds, agriculture machinery. Like these are big things you can do. You can start to maybe invest into a rental. These different individuals can rent the farming equipment, or you can find a company to invest into that have these products and willing to expand. And the American government can introduce you to these individuals. So right here, the government, working through the government. I mean, in many ways, once you get to a certain level, you're going to have some level of public-private partnership at some level if you want to do business the right way and minimize your risk. There are a lot of consultants out there, but to minimize your risk, you want to deal with some type of government. Also, the African embassies. That's very important. There are African embassies all throughout the U.S. And if you go to them and just have a conversation, I'm thinking about investing to your country. You go to the South African embassy in America. I'm thinking about investing to your company in these particular industries, energy, whatever it may be. Can you teach me or help me connect with entrepreneurs? It's worth the conversation. It's just walking in and speaking with someone, or looking online and emailing that person. Also, the African, in particular in Ghana has a dedicated investment and promotion center. I've been to that. I talked to individuals in the Ghana Investment Promotion Center, and they tell you this is how you go about investing and starting a company or investing into this country. They're seeking investments, and it's worth a conversation. Also, lawyers and accountants. Like I said, I'm going to Ghana. This time next month, I'll be in Ghana for a couple of weeks and facilitating, connecting with different, on behalf of clients, as well as connecting individuals and building relationships and things such as that. And these are individuals you can trust, but particularly you can trust someone because they are barred and they can lose their bar license by messing individuals up. So you want to be able to be mindful of it. they can introduce you to different individuals, particularly people that have relationships already on the continent. Trade shows, there are trade shows all around the world. The United States do trade shows. So you can go to those trade shows and find different entrepreneurs that have a booth set up or whatever and say, hey, are you looking for investment? And if so, let's talk business. You may have to sign a non-disclosure agreement. That's the type of legal contract you may have to sign. You may have to sign that. Many things such as that. But there is opportunity at different trade shows around the world. I mean, if you want to invest into Kenya or whatever it may be, I'm mainly focused on the English-speaking countries. And if you speak a different language, I'm not saying other countries aren't good. I mainly been focused on what they call the Anglophone countries because I'm a native English speaker. But I'm in the process of learning French myself, and there are tons of opportunity in many places. Akon focuses on Senegal. He's from Senegal. That's a French-speaking country. Now they speak English in many countries, but you go to trade shows in these different countries, and trade is on the rise. I'm only going to talk about it briefly, but the African Continental Free Trade Act, they just passed that within the continent of Africa, and it'll be easier than ever to trade within the continent. So they're going to be doing trade shows that help facilitate this type of investment. Tech centers, I mentioned it earlier. You can just Google tech centers in Ghana. Tech centers in may call it startup hubs, they may call it tech hubs, they may call it different names, but in whatever country you want to invest into, you can enter that in, and you can go there. You can maybe pay a small amount of money, and you can go into a tech hub for a day and have your seat in there and be able to network with different entrepreneurs in that tech hub, and you can start talking to them. And if what they're saying interests you, you can invest your money, $5,000, $10,000. $1,000 or $100,000, $1 million, whatever your investment strategy is, you can do that. Oftentimes you hear with angel investors, this is a common strategy in America in Silicon Valley, is that they may have $100,000, and then instead of putting $100,000 into one company, they'll put $10,000 into 10 companies and hope 3 of those will take off, and they often do. And also referrals from investors and family and friends. This is very important because from an American standpoint, most investors invest from referrals. If you find an investor, a venture capital fund, or a group of angel investors, and you send them an email, it's unlikely that you'll hear back from them because they want to invest from other investors that have invested into your company, and they get that from referrals as well. So you can reach them. I say all that to say that you can find entrepreneurs who have investments from investors. Talk to those investors and say, what have you invested into? And then you can begin to gauge whether you should make that investment as well, because you want to find people that already have already in the business of investing, and you could potentially network. And also, you have any family and friends. I know individuals on this call. Some of these individuals on the call, they're first generation Americans. Their families are from these different countries in Africa, and they may have a family or friend who are doing some business in there. It may be worth investing into. It's all about trust. We're going to talk about how to evaluate these businesses, but these are seven plans. If you follow these 7 plans, you're going to find companies to invest into. I mean, it's just impossible. Now it goes to how can you vet these businesses to ensure that what you're investing into is the real deal and can increase your chances for exponential profit. That's very important. So we're going to talk about that. And since I am a lawyer and we're going to bring you the real steps to invest, we're going to teach you how to structure your investment. Because like, as I mentioned earlier, you don't want to just take money out of your bank account and then put it into a company. That's not the real steps to invest in Africa. That's not minimizing your risk. Ideally, you want to create a company and then have that company invest into the African company. That's very important. As I mentioned earlier, one of the key metrics before you made any investment was to ensure that a foreign company can own a local company. We talked about that earlier. So one of the things you can do, the best practices to do is you start a company in Delaware. The state of Delaware has some of the best business laws in America. And you would create an LLC in Delaware. For example, you look at Coca-Cola. Coca-Cola is a C corporation. They're incorporated in Delaware, but they're headquartered in Atlanta. MasterCard is headquartered in New York, but it's incorporated in Delaware. So you can incorporate in Delaware and have it headquartered wherever you're living at to ensure that you are protected in both ways. Well, these are some of the best practices to do this. And that's fairly simple. And when you invest into these companies, the entity names are different in America than many other places, but they're in essence the same. What more likely you'll be investing into are private limited companies. Every country is different. They go by different names, but generally speaking, They may be called private limited companies that you'll be investing into in Africa. And what you'll be getting to minimize your risk, you'll be investing for preference shares. In C corporations, America, they call them preferred shares, but in many nations, they call them preference shares. And a preference share, ideally, is that it'll entitle you to get paid before the entrepreneur get paid. So if something bad goes happen and they have to shut the company down, you'll get paid before they get paid. There's a dividend out. You'll get money before they get money. And this is very important. This happens all the time. This is standard business. Everything is up for negotiation, but this is standard business. You raise money from a venture capital fund in America, they're going to be investing for preference shares, preferred shares in America. That's standard business. And then if you get good enough, or if you're already an accomplished investor, we have some people that are in the financial sector on this call who register. You may be able to set you a venture capital fund. And this is the legal structure of a venture capital fund. We'll go through this very quickly. This is the legal structure of it. You hear about a venture capital fund? A venture capital, ideally, they invest large amounts of money into companies. There's some individuals on here that are in this industry, Private equity funds, they typically buy a business and then optimize it, make it run better. But when you're dealing with investment, passive investments, we're going to be mainly focusing on venture capital funds. So you'll see there's a management company up top. Often these are Delaware entities. These are primarily, in America, it's primarily Delaware entities. Embrace the concept of the state of Delaware. It's a very powerful, it's not a big state, but the laws of the state are very powerful and very favorable to businesses. Most of the companies on stock, I'm willing to say pretty much all of the companies, at least the vast majority of the companies on the stock market are incorporated in Delaware. And they just headquartered in other places throughout the US. But in essence, there'll be a general partner and there'll be a limited partner. And we'll go through this real quickly, but the venture capital fund, they'll raise money from pension funds, city pension funds, university endowments, wealthy individuals, and then they'll put the money in a limited partner, and then they'll invest into different companies. So there'll be a partner running this fund, management company. You have a partner running this fund, and there'll be another partner running another fund, and they'll be making investments into different companies. Now in America, they'll primarily be investing into C corporations because C corporations can give preferred shares. They will not be investing into different LLC. Now they'll be organized as an LLC, but they'll be investing into C corporation because C corporation give you those different tiers of investments. And if you invest into Africa, you want to be investing into companies that can give you a preference share, similar to a preferred share, that you'll get paid before anyone else get paid. So these are some of just the legal fundamentals of structuring your investments. So just alone, we talked about a lot. We talked about just how to find the businesses, how to minimize your risk. Structuring it from a legal standpoint is critical to understand because these are some of the best practices to go about it. And then also you want to go about valuing a business. We mentioned earlier, we mentioned earlier, what did we mention? We may not be able to find it, but you value in a business. You have a country you want to invest into. You found an entrepreneur you want to invest into. How do you go about valuing that business? Because they may say, my company has $100 million valuation. Okay, well, prove it to me. How do you go about doing that? And one of the common ways is the earnings-based multiple. That's very important. This is very common. When you're selling a business, this is common throughout the world. You're selling a business, you have it with the earnings. Now, say for example, that business is profiting $100,000 a year profit. You can give it a multiple pertaining to that industry. So if it's let's say it's agriculture, or it keep it very simple, agriculture, and the farmer is making $100,000 a year. Let's keep it very simple. And you're looking to invest into it. And let's say that the agriculture industry have a multiples between 3 and 7. So that business can be evaluated anywhere from $300,000 to $700,000. Did that make some? Hope that made some sense. Shake your head if that made a little sense to you. So that's important to understand. And with that, you will be able to evaluate engagement. If you want a 30% interest, then based on the earnings, the valuation that you have, you'll invest 30% of that. That's a common way to do that. So it's important to be able to see, I need to see your financial statements. Let me see your books. If they don't have any books, then that may not be the company to invest into. You can just be matter of fact as that. Also growth. Oftentimes you'll see particular technology companies, they may not have any profit. Amazon didn't make a profit for years. Facebook didn't make a profit for years. But should you have not invested in Facebook or Amazon? There's many African countries, there are many African companies now that did not make profit for years. That's one of the biggest entities in biggest companies in Africa. I hope I'm pronouncing it right. Like Jumo is one of the delivery companies, like an Amazon in Africa. They're doing the equivalent of what Amazon does in Africa, in many countries. And one way you can gauge the value of a company is through growth. Amazon wasn't making a profit, but they were gaining tons of customers. Facebook wasn't making a profit, but they were gaining users at an exponential rate. So you're saying it's growing at this point, this may be worth me investing into. And then one way to minimize your risk is to have audited financials. There are big four accounting firms in many African nations. Ernst & Young, PricewaterhouseCoopers. There are many of them. There are many big four accounting firms in Africa. So an entrepreneur that gives you these documents as a part of doing business, due diligence, let me talk to a lawyer. Let me take these numbers. Let's go to our local big four accounting firm. And also, as I mentioned earlier, these firms are also going to introduce you to entrepreneurs as well. Go to the Ernst & Young or KPMG or in America and say, I want to meet entrepreneurs in this sector in Africa. You have an office there already. Introduce me to them over there. You may have to pay a retainer. You may have to do some type of down payment or whatever, but they will introduce you to them. And if that's a successful entrepreneur in that local African country, he'll take you more serious, because now you get introduced from a reputable firm, reputable law firm, and they're not just saying that. They probably heard a lot of people say, I want to invest in your company. They may have heard a lot of things as well. They're willing to take you a little bit more serious. And also from a legal standpoint, you may have to sign a non-disclosure agreement with that entrepreneur. Don't be surprised at that. You may not, but when you're dealing with numbers and you start looking at balance sheets and income statements and things such as that, they're going to make you sign, or I would recommend them to make you sign a non-disclosure agreement. I wouldn't want anyone just look at the books of a company and then just go telling everyone this is how much this company makes. Information gets to the competitors. That can make your clients lose trust in you. I mean, it can cause so many different variables. Also some legal implications as well. Like you're giving up trade secrets and different information such as that. But there are also some other ones. There are also some other ways to value. We won't cover these, but these things you can look up yourself. Asset-based evaluation, discounted cash flow, ratio-based valuation. These are some of the other ones. Now, these are the first two are some of the most popular ones, but these are also other ways to value businesses. And you can use a combination of these. You can use earnings-based multiple and discounted cash flow to come to somewhat of an average of how much money you should invest into these companies. And also, when you're evaluating companies, like I said, this isn't charity. This is real stuff, real investments. One, does a company have a CEO? Is there a CEO of the company? Is there a financial person? Who's your accountant? Who's the legal person? Is there a lawyer that I can come into contact with right now? Who are your board of advisors? If you're a technology company, let me look at your board of advisors, your board of directors. Are these individuals, have they done what you're trying to do? If you're a farmer, do you have a board of advisors of successful farmers? Can I see that? Can I have a website? Can I see these people? Can I look at your website? Can I talk to these people? And I know we have some entrepreneurs from Africa on here, but these are some of the things you can start putting in place if you don't have these, because these are things to be attractive to investments. These will give investors a lot of confidence that you can give them their money back. Because you meet an investor, make them sign a non-disclosure agreement, show them the documents, let them meet the CEO, let them meet the board of advisors, let them meet these things, meet these people, and you're going to attract a lot of investments. So it works both ways. And then the entrepreneur will be able to vet investors and say, hey, I don't like you as an investor. You can't invest into my company. Because I know what we bring. I know the value we bring. I have shown you proven track record on paper of audited financial statements of that we are profitable. These are the real steps to invest into Africa. This is how you minimize your risk tremendously. And I pride myself on being able to bring a lot of value to individuals. Like I said, we're gonna send all these forms to you. Just make certain that we have your email address. If you don't have it, you send your email address to Armand Walker, or you can email us at info@globallaw.tv. Preferably send an email to Armand Walker, since we're right here in the meeting. Also, you're protecting your investment. So let's back it up a little bit. So you picked your countries. You've found the entrepreneurs you want to invest into. You've done your due diligence. You figured out, okay, this is a company I like. I value the business. You've already taken the steps for passive investment. You can still have a job in the US. You can still do all these other things that you're currently doing. But you've also got to be doing your due diligence. Before you give up any money, have you done your due diligence? And now you made the investment into the company. How can you protect your money? One way, there's a couple ways you can do it. We talked about preferred shares earlier. But one way you can start off with, maybe let's start off with a loan. So let me offer an investment. Let me offer you a loan, a private loan between private individuals or private companies. And then based on that, if you pay me back, then we could talk about doing an actual larger equity investment into your company. That's one way. That'd be a test run, particularly if you aren't necessarily familiar with the environment. These are some things you can do. This is after you have done your due diligence. You've met the board of executives. You've met the CEO. You've met many of these things. You're acting as a savvy investor, a sophisticated investor. Another thing you can do is what you call an earnout. This is important to understand. You see this a lot in investment contracts. The idea is that an investor will invest into the company. If a company meets a certain metric in revenue, if it meets a certain amount of sales, then certain things will be beneficial for the company and the CEO. For example, here's a sample clause that you can put into a contract. Here's a very simple clause. If company achieves X amount in revenue, that can be $10,000 in revenue, $1 million in revenue, $100 million in revenue. The numbers just change. It's all the same, but the numbers are just different. If it achieves this amount in its first 2 years in operation after the closing date, the CEO shall be entitled to additional compensation, such as X amount of number of shares in the company. They can get those back. So say, for example, you may invest and own 60% of the company, but if it meets a certain metric, then now they've earned back, and now you be 50-50 partners, or whatever you all decide to agree on. Or it can be another sense of structure where that entrepreneur or that owner will receive X amount in cash. Because oftentimes, say for example, if the entrepreneur feels like he had a bad deal from the person that invested into the company, the entrepreneur can just stop working. They can just say, I'm not working anymore. Like, why should I work for a company where I'm not really benefiting as much? So that's important when you're negotiating. Only you can do that is incentivize the entrepreneur with an earnout. You can get cash back. You can get shares of your company back. Because if you passively investing into a whole different continent, you want to keep that entrepreneur motivated. It's very important. And these things are common all throughout the US and Silicon Valley. These are very common things that you see. Also, convertible debt. This is like what I call a loan 2.0. This is important. The loan normally is I'll send a sample loan as well. We can chance to get a sample loan. Normally with a loan, you give out a lump sum of money and they'll pay you back X amount of times with the interest. So you'll get your money back plus interest. But the convertible debt is a loan to the next level. It starts off as a loan, but it can convert into equity in that company if it meets certain metrics. For example, you see this a lot in Silicon Valley, you see this a lot really all around the world. It started off as a loan, but if the company gets bought out by another company, or it meets a certain level of revenue, or it's about to attract other investors, then it'll convert into equity into that company. So it's protecting your downside, it's protecting your investment, because if they can't pay you back, it's a loan, they have to pay you back. But but you also gives you the upside as well to take advantage of that, because the loan you only get the interest back. But if it can convert into equity, and you can get a geometric profit in your money. So it starts off as a loan, but it converts into equity into the company. So these are some of the ways to protect your investment. And I mentioned earlier, oftentimes you'll come across entrepreneurs who have been making money. Like you may find a business owner, a store owner. They may own machinery. They may own, I mean, there's so many different industries in Africa. I mean, but it may be a record company. There may be a music club. There may be, I mean, there's so many industries. I'm not even mentioning a lot of the industries. So I know there's a lot of industries out there that I'm not mentioning. But if it's a farmer or whoever it may be, and they don't have these financial statements for you, but they're a talented individual, they can make it move. You're seeing the profit. You're seeing the organization skills. You're seeing them doing things that are productive. You're seeing it yourself. They have witnesses, they have references, but they don't have the financial documents. They don't have the structure. They don't have a company set up in place. They're operating based on cash. Should you still invest into that company? My answer is absolutely not. That's my recommendation. Now this may sound a little harsh, but these are things I wanted to ensure that we had African entrepreneurs on here, because these are my things that a savvy lawyer would tell their client. Because this isn't necessarily charity. This is business. This is business. So you have to get your board of advisors, board of directors in place. You have to get these things in order to make certain that you are tracking your investment. And if you are an investor standpoint, you want to ensure, you want to have the utmost confidence that you can get your money back and also increase your chances. And one way you're not minimizing your risk, you're not taking a real step to invest in Africa, is by not having a company that doesn't have their financial documents in order. Because they're saying we want investments. They're saying we want investments. Now, if they don't want investments, they don't want investments. But, and also you want investments in the majority of companies you encounter. You got to walk in knowing the majority of entrepreneurs I encounter, I will not invest into their company. I'm looking for the baseball analogy. Warren Buffett talks about this a lot. You're looking for a strike. You're waiting for a strike. Most of the balls that come down from a baseball, you do not swing at every pitch. You're waiting for the one that perfectly aligns. Because this is passive investments. You're not going to be doing the daily management of the company. This is very important to know. I did the first video we did on foreign direct investments. You may be more actively involved, but this is passive investments. So you want to do that. But I say all that to say, if there is an entrepreneur that you believe is talented, and you believe this person has a potential, he or she, and there's an incredible amount of women entrepreneurs that are doing their thing. I mean, in everything, I mean, fabric, I mean, everything, hair. The hair industry is booming in Africa. I mean, there's so many different sectors, men and women, that are doing. And if you have this person, you believe in this person, it could be a family member in many ways. So it could be whoever it is. You can help this person get some structure for their business. You can get some audited financial statements. You can help get a bank account. You can help with all these different things we talked about earlier. And then you can invest. Because you want that entrepreneur to know that this is real business. This isn't necessarily a cash issue. Or it's important to have cash, but you also want to facilitate it going through a bank, a reputable bank in that country. You also want to have a legal entity. These companies, these things exist for a reason. They're more attractive to businesses. So you want to make your business more attractive to investments as well. Because you know a savvy investor will listen to you, but they already have the mindset that I'm not going to invest in the majority of companies I come in encounters with. And you see that in America every day. I mean, if you're an entrepreneur or investor in America, you get contacted with, I mean, it's countless. I thought investors, it's countless amount of emails and cold calls they get from people in America saying, invest into my company. And they know ahead of time, I will not invest into the majority of companies that I get contacted with. So this is just business around the world. So these strategies apply as well. And also, this is my last slide pertaining to risk minimization. We talked about risk minimization all the way throughout here. And the main three ways you can minimize your risk. You can contract it away, you can insure it away, and you can hedge it away. We talked about some of these things. You start with a loan, preferred shares, the preference shares, earnouts to incentivize the individual, and also international arbitration. You have that in the contract as well. I mean, individual, there's a dispute in the business. You all can instead of litigating in the courts of the U.S. or in a local court where it may not fit, where the other entrepreneur may feel like you may get up what they call a hometown bias. You may get individuals, the court feeling sorry for you in either place, You can do it in international arbitration. And you can, as many you can choose. The New York Convention, there are many you can choose. New York Convention is a very popular one, but it's international individuals. They're not affiliated with either jurisdiction, determining who is the winner in that aspect, for lack of a better word. You also get insured away. If you're dealing with farming, you can in many ways ensure that there's crop insurance. There's a bad season, the insurance will reimburse you. These are some things you can make certain that the entrepreneur has in place. These are the real steps to invest in Africa. Political risk insurance. For example, you saw in Cuba when Castro came in office, he just nationalized everything. Every company is property of the Cuban government. So the Bacardi family left, and they went to Puerto Rico. I mean, there's many Cubans left in many ways because of political risk. Also, natural disasters. If you're building a hotel, I mean, what happens if I don't know, what happens if a natural disaster comes? I mean, there's something that's unexpected, a fire, I mean, whatever it may be, come and wipe out everything. And also when it comes to hedge, if you're exchanging money from different currencies a lot, particularly when it comes to like international trade, you can hedge against those currency fluctuations, those interest rates fluctuations, and many things such as that. So this has been an incredible part, beginning to teaching the real steps to invest into Africa from passive investments. If you do this, there is no doubt in my mind that you will be a successful investor in Africa. These things apply across really anywhere. We've showed you how to find the businesses. We've shown you how to strategically pick your African nation. We showed you how to minimize your risk in the contract aspect. In so many different areas we've shown you. And I hope I was able to bring you some value, because these are the real steps to invest into Africa. There's no doubt about it. So now we'll turn it over to Armand. We're gonna do a book raffle, because we believe in providing value. And one way we can provide value is through information. Another way we can provide value is through prizes as well. So Armand, take it over from there. One thing I pride myself on is being able to bring real value to people, like real value. So you can walk away empowered. You often hear individuals, they'll go around the subject, but I want to tell you, cut through it. This is how you do it. Step 1, step 2, step 3, step 4. So I'm confident, hopefully I can provide some value to you in this 30-minute consultation, because it's important about it. I mean, this is the new year, it's 2021. Can you take what you're trying to do to the next level? Can we make your dreams a reality? And I believe we can. And it requires a team. Surround yourself with some of the best people, best minds in the world. Teach you how to take advantage of it. International trade, investment has always happened. America was built on people coming from one nation or one area to America to take advantage of opportunity, a thriving, growing economy. America in the beginning was an emerging market. So these are some of the same things you can find in the continent of Africa. I mean, I think it's the last place for massive development. I mean, these are focused on passive investments, but there's opportunity in education. There's opportunity, I mean, everywhere. I mean, everywhere, you know what I mean? Everywhere. I mean, you name it, health, industry, I mean, every single industry you can think of. I mean, there's opportunity for it in Africa. And if you have a level of expertise, you can begin to start strategizing. How can I take advantage of this in Africa? What is your global strategy? From America's standpoint, there's more money outside of America than in America. There's more opportunity outside of America than in America. America is a very mature economy. It's a very mature economy. But there's opportunity. People are doing this everywhere. China, they have entrepreneurs. There's no factories in Africa. Africa will be the next manufacturing hub of the world. So we can talk about some of this in my 30-minute consultation.
And so now we can keep going until our second presentation from an economist, Taya.
Thank you, Armand. Thank you, Attorney Jeremy. It's a great pleasure for me to present leveraging donor funding for private investment in Africa. But before I go into that, I just want to give you a summary of what Attorney Jeremy has presented, just for you to have, the key nuts and bolts, because he has said a lot of things, and we're going to be sending out the presentation. But passive investment, like he continuously emphasized, is what he was talking about. And I want to tell you that it's all just not in Africa alone, also in America. The richest people, if you go and do your research very well, Warren Buffett and co., part of their investments was in what is called warrants. That is, you have companies who issued warrants, which are low-cost investments, and these companies then grew into high-growth impact companies, and of course, they made a lot of money from little investments as little as 10 cents per share. And so what we're talking about passive investments in Africa, it's not a new concept per se. It was existing here and it's still existing. And like I said, the richest of investors here made their money from warrants, which are issued by high growth companies that you and I don't know of. And they are under preferred shares. And of course, as they achieve the results, the investments go up and wealth is made. So that's actually a very key strategy. Passive investments is a key strategy to wealth creation. I want you to know that it's beyond investments. It actually can create wealth for you beyond what you can imagine. The core elements I want you to take home, just like Attorney Jeremy mentioned, strategy. You must have a strategy. You know, the legend management guru, Peter Drucker, said something which has caught my attention and I've held on firmly to it. He says, those investors that make an impact and wealth will always search for change and opportunities, and they will respond to it with a strategy. It is very important. If you're going to do anything substantial that will earn you impact and bring you wealth as a passive investor, you have got to have a strategy. The other word is opportunity. There are tons, billions of tons of opportunities out there in investments. These are actually found in small, medium enterprises. We're not talking of big companies. They are small, medium enterprises. And let me surprise you, the most growing trend now are women-owned enterprises. They are very stable. They are very sustainable. They have quality, excellent leadership and management. So I encourage you, let's look out for women-owned, women-managed, women-led enterprises. They are actually turning the world around, especially in Africa, because they are diligent. They put their all in it, and that's not to minimize men anyway, but that's just for you. So you have strategy, you have opportunity, you have niche, which is where I mentioned women-owned enterprises. And then you had Attorney Jeremy continuously mention minimize your risk and optimize your investment. That's what all this seminar is about, how to minimize your risk and optimize your investment. Let me ask you a question. Where would you put $1,000 in investment? And over a 12-month period, you are able to earn more than $10,000 to $12,000 real money. I can tell you that you can do over and over in Africa when you are able to minimize your risk and optimize your investment. And that requires strategy. It requires niche. It requires due diligence. He emphasized due diligence. And that's the purpose for Global Law Media. That's why we exist, is to provide you due diligence that guards and guide your investment to achieve the maximum results that you desire, even beyond what you desire. One of the things you also mentioned that you need to, it talked about growth potential, audited financial statements. These are things that people don't ask for. People who have lost money in Africa, and I'm a Nigerian, by the way, and of course, so I've seen a lot of people who have lost tons of high value investments in Africa. Why? Because they don't do these things that you have just been taught. They don't go through due diligence process. They don't engage an organization or a company like Global Law Media to help them to develop an investment plan or strategy by taking into consideration these core elements. So please don't invest foolishly. Invest wisely. The investment that it will cost you to engage Global Law Media to do the thorough due diligence for you compared to what you will make is very, very minimal. And that's what is called the seed part. If you're not willing to seed, how do you expect an harvest? So that's important. He talked about political environment. We can provide you a critical analysis of political environment, not what you hear in CNN news. We will provide you what is actually happening on ground. We have local investor field people who will give us the required relevant information that will tell you the political index, even in 5 years' time, what you will not know about. So that is very important, because the political stability is key to investment, results and strategy. He also talked about, business valuation, and being an economist, that's an edge for me, is an area for me. Business valuation is important. One of the areas that people have also lost money is that people will provide them with very shoddy business valuation. They get excited about it, but it doesn't have substance. And then within a few months or a year, the whole business falls apart. What you thought was highly valued. So it's important for you that it's done by a very reputable individual consultant. Organizations or even institutions can do that for you. Colleges, they're using their students to value business. University of South Africa has a hub that they will do a thorough business evaluation of any business investment you want to put your money in South Africa. So these things that you are learning here, they're actually worth a lot for you as an investor. Next, he mentioned preference shares, and that's where you're going to. Structure your investment, the legal structure of your investment. That's an edge for Global Law Media, and we want to help you there. So you hear the word strategy, opportunity, language, minimize your risk, optimize your investments, consider business valuation, very recognized organization to do business valuation, look into women-owned enterprises, women-led and women-managed enterprises. Two industries I want to mention that are really blowing off the roof: the apparel and leather and textile industry. They are very soft industry, but in Africa, I can tell you, African textiles are gaining global recognition and impact. African-made leather, finished leather products are blowing off the roof. And then, of course, the apparel, all kinds of other accessories. And these are investments that you cannot lose on them. They are guaranteed sustainable long-term investments. And there are many small, medium enterprises. And when you invest in it, it's not just the financial return, you are also bringing in what is called a social capital. You're doing something that is socially responsible. And I think it will actually also motivate you, give you satisfaction and fulfillment, that you are not just making money, but you are building people's lives. You are transforming people's lives, and you are building sustainable communities and livelihoods. And so it brings joy to you to invest, to make wealth, but also to see lives transformed. My presentation today is focused on a different aspect, but which complements passive investment or private investment. And it's been titled Leveraging Donor Funding for Private Investment in Africa. What has changed over time is that, donors, and I know most of you that are on these platform, you understand or you have heard about the word donors. And the traditional meaning of donors are they give out aid. This is beyond aid. The donor investment community has transformed from just giving aid. They are now looking for partners. They're living in a new normal, and that has been in the last 5 or about 10 years, where they're looking for investors, private individuals, private companies who are willing to partner with them in their mission. Why are they looking for private investors? One, reach. They believe they can guide to reach much many people in terms of the scope. Number 2, effectiveness. Number 3, efficiency. And then overall sustainability. So they're looking for you and I, individuals who, like Attorney Jeremy said, you form your private enterprise. Don't do it by individual, but there are also opportunities to do it on individual level, where you then engage or do a thorough search of a donor, see where their mission priorities, mission objectives are, and then see how the alignment of your interest of investment can be matched together, and then approach them, which we will talk about. So let's talk about what is the purpose of donors looking for private sector investment, the purpose of the model. One thing I would like to do is to define it for you. The definition is a specific type of investment, that is the donor private sector investment. It's a specific type of investment whereby donors with private sector partners advance mutual interest through co-creation. It is a mutual interest. It's not just their interest, but also your interest through co-creation. That means you bring to table what your interests are, just like Attorney Jeremy said, the interest areas, industries you want to invest in, and then they look at their own mission, objectives, or priorities and see where there is an intersection, there is a match. And if there's a match, you begin to co-create. That means you bring to table what your own theory of change is. Number one thing to understand is that it must address a development problem, a development problem or cause that meets the objectives of the donor. Number two, it must also have a high scope. They're not just talking about a few thousands or tens of thousands. They're talking about how can your product or services, or the product or services you are interested in investing in, how can it reach out to a better and a higher market population? So it is important to understand that it's mutual interest. People always think, no, they're going to muzzle us. No, they're going to work together to co-create a package of services or investment that reaches a high number of people, that is effective, is efficient, gets you your returns, has a social capital. So that is the essence of donors looking for private sector investment. So they're looking out for you. So it is actually called fostering business with a purpose. Fostering your investments with a purpose that involves human lives, communities, and of course, a whole nation transformation. Now let's look at the core rationale that supports this. Please go to, you're now on the slide. Go to the first slide, please. Yes, that's it. International Development Adoption of the 2030. If you're not aware of this, in 2015, there was a transformation from Millennium Development Goals to Sustainable Development Goals. The distinction between SDGs, as it is called, and the Millennium Development Goals, which ended in 2015, is that the SDG now has leveled the playing ground for every investor, and it's inclusive. It includes individuals, corporations, non-profit organizations, foundations. The SDG stands as a foundation of guiding and guarding each and every investor, whatever type of investor you are in specific focused target sectors. Number one, specific focused target strategies, themes, and then they have defined the indicators. There are 17 SDGs, 17 what you can call overarching goals that govern every kind of investment you can think of in any country. And based on this, they've also identified 169 targets. So that helps you as an investor, just like Attorney Jeremy was mentioning. Metrics is very important, that you have indicators that can guide you to make the right decisions for your investment. So we have 169 targets, very specific targets. So when you invest in a particular SDG goal, in an enterprise that is related to an SDG goal, you can be sure that you can know how to monitor what it will achieve through the targets. We have 244 indicators. Next slide, please. Under the SDGs. So it is important for you to know that the UN Sustainable Development Goals is not just for countries, it's also to guide investment. There's also what you call the United Nations Global Compact Principles. And these are 10 principles. The United Nations Global Compact is actually designed for private sector enterprises and investment. Is to guide you in understanding that your investment will not violate human rights, will not violate environmental principles, will not oppress communities, will not foster human trafficking. So these UN 10 principles can be used as an evaluation for your investment. When you look at a company, just like Attorney Jeremy mentioned, when you look at a company, you look at do they have a human rights policy? Do they have environmentally friendly policies, or an environmental policy or information? All these will guide you before you make your decision. Next is Agenda 2063. And Agenda 2063 is an African agenda that supersedes the UN Sustainable Development Goals, but is regionally focused. And Agenda 2063 is very robust. It's very strategic and is very robust in its ideals. And you can look at that because you need to understand, and we would help to guide you and guide you in understanding how to navigate to the goals of Agenda 2063. That tells you we're in 2021. So basically, we're talking about 42 years from now. There's been a roadmap that is clearly laid out, which can give you strategic approach to your investments. And so next slide, please. Under the Agenda 2063 and the UN Sustainable Development Goals, you find core strategies which includes inclusive growth, job creation, increasing agricultural production, investments in science, technology, research, and innovation. One thing you will find out that has been created in the last, just about the last decade is called STEM, science, technology, engineering, and mathematics. STEM investments are just amazing. If you put money in STEM investments in Africa, that means enterprises that are geared towards science, technology, engineering, and of course the M stands for mathematics, which of course is also useful. I can assure you, you will have a guaranteed, sustainable, steady, and high return investment. Next slide, please. Part of the core strategies, I've mentioned that gender equality, women-owned businesses are also part of the areas where you can put your investment in collaboration with donors. They're very concerned about gender equality, and gender investments are also increasing a lot in the region of Africa. Then you have youth empowerment, and of course, provision of basic services. I think Attorney Jeremy mentioned health and education, nutrition, and nutrition is linked to sustainable agriculture. That is food production, not just producing cassava, but producing fortified cassava, which can bring in nutrients and can, of course, be used with children to enhance their quality of, food intakes, and then make them more healthy, make them more productive to learn. And so it's important. Water and sanitation. Let me tell you an interesting thing about water and sanitation. Coca-Cola, in collaboration with certain donors in Africa, is investing over $30 billion in water and sanitation, up to small, medium enterprises who are providing or producing water cans, water filtration systems. And so there are these very creative, sustainable investments that you can partner with donor. Just like Attorney Jeremy said, you will do your due diligence in mapping out which donor is doing what in which country, who is doing what, where, and how are they doing it. We call it who is doing what, where, and how. Once you do that, then you can see, do their mission objectives match my own interest? Because we talked about mutual interest and co-creation. Donors have come to acknowledge that Africa's sustained economic growth is essential to global development and requires meaningful interactions with private sectors. They are looking to interact with you. And I think that should excite you and I. Next slide, please. Let's talk about, okay, I want to talk about the type of donors. I'm going quickly, but you get, you'll get a copy of the presentation. I rounded up with what McKinsey Global Institute talked about. There's $2.6 trillion collective GDP as at 2020 in Africa, $2.6 trillion. You have $1.4 trillion Africa's consumer spending as at 2020. There's no place in the region of the world that matches that. 1.4 trillion Africa's consumer spending. Then you have 1.1 billion number of African households working age by 2040. That means 19 years from now, you would have a 1.1 billion working human capital that can be tapped into. And to tap it all, 128 million number of African households who have discretionary income to spend on consumer goods and brands. And so the type of donors, we have bilateral donors. Bilateral donors are basically public sector agencies that provide investments on behalf of a single donor country. And they do that through grants and loans. And so they're also looking for private investors. And it ranges. You may say, are they looking for small investors? Yes, it ranges from a small amount of $50,000, $100,000 and much more. But they also can accommodate a consortium. I see one of the questions is asking for a consortium of investors who come together, interested in a country, interested in a sector, focused on a particular sustainable development goal, and it aligns with the mission strategies, and then they work with you to create an investment that would meet both organizations or partners' interest. So you have bilateral, you have multilateral donors. There are public sector agencies that accept contributions from multiple donor countries, and they provide investments in terms of loans and grants, even though they deal with governments, but they still have opportunity for a private investor. If you are into professional services, this is an area you can tap into, that you can tap into it through contracts. So you can get a contract to provide a service or provide a product for which a multilateral donor is investing in that country, and you are guaranteed to be paid and to make your returns on your investment. So multilateral agencies, and there are platforms by which you can seek and search these opportunities. Next, you have development finance institutions. The development finance institutions, they complement your investment because they give out loans to small, medium enterprises to enhance development priorities and development ventures. And so you can identify a development finance institution that is based in a particular country. You have in South Africa, you have in Nigeria, you have in Kenya, you have in Ghana. In each African country, you have DFIs, as they are called, development finance institutions, who, if you do your due diligence and you express your interest, they will guide and guide you into enterprises which they are supporting, which your investment can increase their capacity to produce and to operate, and thereby bring the high returns onto you. Next, you have philanthropic organizations, foundations. Traditionally, they give out grants, but now they are also going for social responsible investments. So that's another opportunity for you to partner with donors. Next slide, please. And then this last three, you have multi-partner trust funds. If you want a stable, secured, stress-free, without any strings, you can put your investment in multi-partner trust funds. And they are very well established, recognized, with financial audit statements, good leadership and management, that we can help you identify and source, and your investment can be secured. The same thing with development trust funds. And then, of course, lastly, you have impact investment donors. Impact investment donors means not only financial return, but also looking at social and environmental returns to your investment. Next slide, please. Next slide, key characteristics. Okay. What are the key characteristics that govern this mutual interest? I've mentioned one of it continuously. It must be guided by the Sustainable Development Goals, which is what we call the SDG 2030 agenda. So it is important that you look into the Sustainable Development Goals and see what are out of the goals, which one actually attracts your interest, or which one aligns with your area of interest of investment or industry of investment. It must address core development problem. The problem, your investment that you're looking to partner with donor must address a core development problem or an opportunity. It must also provide social, environmental, or economic gains, which means it must solve a social, an environmental, or economic problem. Number 4, it must be market-based. And what market-based means is that basically it has demand and supply for those products and services. So if you're looking for an investment to partner with a donor, you're looking at enterprises that a donor is supporting. It could be a non-profit enterprise, but it does operate on a market-based model, which means on demand and supply. And so there is a return on investment, both on the financial side, on the social and environmental side. It must align with country sector development priorities. And there are national strategies for a country, in each country in Africa, that really focuses on the sectors that you may be willing to invest upon. So it would be good for you to look at these sector strategies and priorities and get acquainted with them. Next slide, please. Yeah, it must identify, it must be innovative. Of course, we know the impact of technology. And one of the industries that, like I also need to mention, is fintech. Fintech is also growing very tremendously in Africa, because 95% of Africa now is covered by mobile technology. So you can absolutely reach even the rural communities. And that's the interesting thing about Africa. With the extensive population, the extensive spread, the consumer demand, mobile technology has now made it very easily accessible. So if you are investing in an enterprise, it will be good for you to do your technology index analysis to see how is this business using technology, because that is going to drive scope, scale, and impact, and it does drive return on investment and wealth creation. It must have high impact on target population, particularly underserved communities and populations. And part of the underserved population is youth. 55% of a population, 45 to 55% of current and growing population in Africa is between ages 15 to 35. You're talking of a growing youth population, which of course gives you a longevity to your investment. So if you're looking into an enterprise, look at who are their customers. What is their customer base? And if their customer base is targeted to this underserved population, the youth population, you have a secured, sustainable, steadfast, and a high guarantee of a long-term investment strategy in focusing on vulnerable populations. It includes shared resources, risk, and results. That means when you invest with a donor, you are sharing resources, you are also sharing risk. And you've had Attorney Jeremy mention that continuously, minimizing your risk, but you're also optimizing your returns, which is the result aspect. Donors are usually looking for a leverage 1-to-1, but preferably 1-to-3. That means, a third, they're looking to support your investment where you have a higher ratio, 1-to-3, which means 1/3. For example, if you're looking at a 1 million investment or even 100,000, the donor may supplement that maybe by 30,000. So you have a 130,000 investment in that enterprise, and it does increase your ability to increase your returns. Next slide, please. And I'm going very fast so that's to save time for questions and answers.
Yes,
I've talked about co-creation. And of course, I want to emphasize on understanding donor value proposition and your own value proposition also. It's very important to look at what is value to the donor and what is value to you. If there's no congruence between their values and your value in terms of value proposition, then there is no match. And of course, like I said, there's no need to go further in that. Next slide, please. Engagement insights, which is very important. And that's the question I always have people ask me. How do we engage these donors? First of all, how do you find them? You leverage connections and knowledge. Connections about true people. LinkedIn is a very good avenue for you to identify those who are within this donor base, professionals who are working within this donor base, and you can start your engagement by appreciative inquiry, by asking them some questions. Use your LinkedIn connection. You can raise your LinkedIn to premium. You'll find more donors are on that platform, and then they express their mission, strategies, objectives. You have corporations who have their corporate social responsibility investment strategies, which you can learn from. So that's one way to leverage your connections, your connection network, and the knowledge base you have. Number two, do a desk research of donors' mission priorities, funding opportunities, and country assistance strategies. Another way to engage them is to determine or define where donor funding, whether it's right for your business. And I mentioned that. And the way you do that is to look at the value proposition of the donor, the mission priorities of the donor, and your own value proposition so that there is a match. This is very important. And I think Attorney Jeremy mentioned this. Align your business plan with local development challenges, national development challenges, and SDG. There is tremendous local capital, human capital in Africa. And if you align your investment strategy plan to how an industry that you invest in actually has low cost capital, you're going to have a high returns. It's just simple economics. And then, of course, you can engage by developing a 1 to 2 page letter of intent or inquiry to initiate communication. And that's kind of a capsule on partnering with donors to leverage your investment to achieve a higher returns. Thank you so much.
Great. That was
Righty.
great. In the interest of time, we do want to thank Tayo for that, because that was incredible. And in the interest of time, we want to get to the Q&A session. You can go ahead, Armand.
All righty. Yes. In the interest of time, we'll just go ahead and just do one question for now. But if you do have any further questions, you can send those to info@globallaw.tv concerning this presentation, or whatever question you may have for legal education. So the question is, what is the status of solar, wind, and geothermal power, and which could help to make Africa more green and less dependent on fossil fuels?
That's a great question. Primarily, there is tremendous opportunity. I mean, the status of it is that they are doing some development. And from a U.S. standpoint, this is important. From a U.S. standpoint, as Tayo mentioned, there are government resources that you can use, and they will provide you funding. For example, Power Africa, they are willing to give grant money to private enterprises to build solar projects in Africa. But you can write this down, Power Africa. They have been giving out millions to private companies to help them create a solar farm in Africa. Same thing for energy. Same thing for all the other different energy aspects that you mentioned. So the opportunity is absolutely astronomical. We talked more about past investment. Tayo talked about donor funding. Power Africa is an aspect of somewhat of a donor funding. They're giving out grants to it. So the status of it is that it's alive and well, and it's growing, and needs to be more. And that pertains to Africa as a whole. That's one of the benefits of Africa. It can leapfrog a lot of those things to go straight to renewable energy. It can be more renewable energy efficient more than many other countries. And you see a country like America, it's slowly going toward solar, slowly. Africa has opportunity, as well as many other developing nations, to take a leapfrogging effort to be able to go to those renewable energy resources that you mentioned. So the status of it is growing. There needs to be more public-private partnerships. Idea of a public-private partnership is that you're partnering with the public sector. That can be the government. That can be public sector can be tremendous. The public sector can be the U.S. government. It can be with a combination with the African government, and in combination with the local chiefs, because Africa has a chieftaincy. In my first video, I brought a chief onto that one to show you how the chief have tremendous influence. Because Africa, unlike many other places, they have somewhat of a dual relationship of governance. They have the president, and they have all those traditional individuals, but they also have a chieftaincy. They have an installment where they govern the local rules and regulations of that local village, so they can give you land. So that's a public-private partnership you can do with the local chiefs. And I mean, the opportunity to do business in Africa is absolutely tremendous. I mean, you name an industry, Africa has waters that are full of just fish, seafood. I mean, there are minerals, platinum, lithium, gold, diamonds. I mean, these are things that are everywhere. I mean, agricultural. I mean, there's opportunity is immense, and also the retail sector of Africa. And I hope you all have thoroughly enjoyed this webinar. I hope you all have learned something from this, and I hope we were able to bring you some tremendous value. And Tayo, you can say something really quick too.
Yeah, let me just add to the question as an answer. And you've mentioned, yes, there is Power Africa, but also there are non-profit organizations in Africa who are actually in the power sector, who are looking for social responsible investment. And you will invest in them, just like Attorney Jeremy mentioned. You do your due diligence that are highly profitable, because there are products like solar lights, solar lanterns that are needed and that are reaching rural areas where you have a higher population. So your question about what is the status is relating to scope, scale, and impact. It is big, and it's very open. And it's open to medium and small investors. And your small investment can actually make a high impact. So that's a good area. Power Africa is under the United States Trade and Development Agency, USTDA. You can read it and see what the criteria is and the opportunities that are there. But we can also guide you once you, the post conference to this and send in your expression of interest. We can guide you and find out the relevant information that can give you more substantive data to guide your investments.
All right. Thank you all for coming. We appreciate individuals for coming. I hope you're able to bring some value. So thank you for coming. And we'll be doing another Invest in Africa webinar in the coming months. So thank you all. I really appreciate it.